I'm Matt Bishar with REIT.com, and for this episode of CEO Spotlight, I'm joined by Phil Hawkins, CEO of DCT Industrial Trust. Phil, let's start. Where do you see fundamentals heading in 2013?
Let's start with where it is now. Fundamentals have been improving for several years. Supply is in pretty good check. Demand has been healthy, not great, but steady, despite a lot of things to worry about in our economy. Decision making has continued to happen. We've seen good leasing activity really since the summer. Had a great first half of the year as well. So 13, I see 13 happening much as we're seeing it now. Good demand, good activity, not necessarily great. We're in a sort of a slow growth economy. There may be months or a quarter here and there that are better than that or maybe a little slower than that. But for the most part, companies are making decisions when they are able to find solutions to their distribution needs that save money, improve efficiency, and reduce time to market. And that's what's driving our business. It's not driven just by, or maybe even predominantly by, the growth of the companies. That would help. Being in a growing economy would help. But being in an environment that forces companies to be more efficient with their capital and reducing their costs has actually helped our business as well.
And DCT is a domestic business, but increasingly the economy is a global one. So how do you kind of balance the focusing on the domestic business while also keeping an eye on global issues and trends?
You know, I think what drives our business is what companies are doing in the U.S. Clearly, a lot of our product, we have a large presence in Southern California, for example, where a lot of product is coming in from China global points. But what drives our business is really the U.S. economy, U.S. demand. And that, to me, is what we think about is being the best, most successful U.S. operator of industrial real estate. Clearly, global factors matter. We see that. But on the other hand, our focus is really being a strong, responsive, effective U.S. focused landlord.
And how aggressive is DCT pursuing acquisition opportunities, and what's the climate for deals right now?
We've been active. We've been active both acquiring assets as well as developing assets. Our focus has been as much on applying our operating platform as it is our capital. So we've been willing to take on assets with leasing or redevelopment risk, opportunities that we see to create value beyond just investing of capital. Similarly with development. There are certain markets where we believe and have been successful so far in putting capital at risk alongside our operating platform to create value where most of the investors in the market are looking for more stabilized assets. They may not have either the risk appetite or the operating platform. So for us, it's been trying to deploy our capital alongside our operating platform to make it a successful investment.
Phil, thank you so much for joining us today.
Thanks for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.